Hey folks, Dan Frio here with your morning update for March 27th, 2025. So last night we had a video that we talked about. We talked about stagflation and inflation and things like that and how that would affect the real estate in 2025. Well, today we got some big information out. Let's just jump over to the economic calendar real quick. Then I'm going to summarize all this for you because my name is Dan Frio and I hope to be your nationwide mortgage loan officer, where our slogan is one application, one credit pool. We're going to shop your loan to over 30 different lenders. Now, how do we do that? I'll give you all that information at the end of this video. So without further ado, let's get today's economic calendar to see what's happening in the markets that are going to affect interest rates today. So Thursday, the 27th, we had continued jobless claims come in. They were actually lower than expected. That's fantastic news there on the jobs front. Then we had GDP. Look at GDP. Last reading, well, here's what it was. Previous reading was 3.1. The forecast was 2.3. It actually came in better than expected. So good jobs report today and not a bad GDP reading that we're seeing so far. So that kind of takes away the fact that, are we going to stagflation? Probably not with this GDP and the jobs report numbers. So maybe stagflation is out of the equation right now because we don't want stagflation as a nation. So let's get over to see how the markets are doing right now. Mortgage rates yesterday were absolutely stable. What's happening today? Well, let's get over to see what the markets are doing. The Dow Jones and the equity markets, they're taking it on the chin today, and the VIX is up 3%. That's saying the anxiety level on Wall Street is a little bit higher than normal. And you go down through here, Dow Jones falls 200 points as more tariffs continue to hit the markets. So let's look at how this is affecting everything, especially if you're watching this video, you're concerned with real estate. So let's get over to it. Right through here, what we focus in on each day is this right here, mortgage rates. Well, what you're seeing right here is a chart and it looks like it's going up, but when this goes up, mortgage rates go down. So why is that? Well, this is actually the mortgage bond that trades on Wall Street. And what you're seeing at the top there is the price of the bond. So you have to kind of invert it a little bit. Let me make it clear for you. I'll do an analysis for you. Try to do this at least once a month just to help those newbies out here to understand the bond market. So here's how bonds work. As the price goes up, yields come down. And as prices go down, the yields go up. What I mean by yields is interest rates. So let me give you an example of this. Let's take a low price of what I'm paying you for a bond. And I'll make sense of it. This is a bond, okay, that investors can buy. So let's say, for example, this bond has a maturity price of $100. Okay, so whenever it matures, it could be next year, a year after that, it's a bond. When you turn in your coupon, you're going to get $100 back. That's basically how it works. So what you pay initially is actually going to determine the yield. So let's bring down that price to say we're going to pay a low price. Let's say today I give you $50 for that bond. So I give you $50 for the bond. You give me the bond. I hold it till maturity. And at maturity, I hand it back in and you give me $100 because that's its face value. Well, how much was my yield? What was my return? Well, I doubled my money. I gave you 50 and I got $100 back. Okay, so let's drive up the price like we're seeing right through here right now. Okay, so let's just, for extreme purposes, let's say I give you $100. Okay, so I give you $100 and you give me the bond. At maturity, I hand in the bond and you give me the face value of the bond, which is $100. And you're like, Dan, why would you do that? You gave 100, you got 100 back. Your yield, your rate of return, you didn't zero. Exactly. So see how it works? If I pay a low price and it goes up, the yields come down. Okay, so that's how all this works. So we love when this chart's going up. Let's go over to Rick Santelli so he can give us today's caption on what's going on with the economic calendar. He has a little more flair than I do with this. So let's take it over to Rick at CNBC and let him give us today's continued jobless claims and a little additional more information that he might have for us. So Rick, take it away, buddy.
Rick Santelli standing by at the CME. Rick, take it away.
Yes, on the GDP, of course, this is our third time around the block. The current level at 2.3, well, that would be the best since the previous quarter when it was 3.1. And if you look at the next week, that'll be the first quarter of 24, which was 1.6. We move up a tenth to 2.4. So 2.4 is our final read. And 1 month from now, we'll get the first look at first quarter GDP. If we look at consumption, it moved down a couple of tenths from 4.2 to 4%. And on the pricing indices, on the main price index, 2.3. We lose 1/10 from 2.4. If you look at the PCE price index, that's a quarter over quarter. And of course, we know at the end of the week, we're going to get more PCE data. 2.6, it drops a tenth as well from 2.7. Now, let's look at what we have on initial claims. 224,000 That's 1,000 less than a slightly revised 225,000, right in line. The best way to look at this number is the last time we were over 250,000 was basically around Halloween of last year when it was 260,000, and the lowest reads that we've had recently are hovering right around 208 and 203. Those were in January of this year. And finally, if we go to continuing claims, 1,856,000. That's about 20, 30,000 less than expected, actually. In the rearview mirror, a slight revision from 1.892 to 1.881. Maybe the best way to understand this number is last time it was 1.9 million. That was the second week of January of 25, and that comps back to November of 21 when you start getting readings over that. Now, advanced trade, we know that this number is a lofty number. This particular series on the trade balance came out in 1989. And of course, the current number is minus 147.9 billion. That's a new all-time record. We pretty much seem to be going record to record. However, last month now at minus 155 does still claim the biggest deficit. This month a bit lower, minus 147. Those are scary numbers. And we could always debate as to whether these trade balances is a good thing, bad thing. Does it put money in the U.S.? Does it help purchase treasuries? Does it get recycled? There's a lot of ways to look at that number. Inventories. Boy, what a heightened awareness of inventories. And I'm sure Steve Leisman will touch on this because the inventory game goes right along with the tariff game. Everybody's armchair and what's going on. But we did get some big jumps. Now, let's look at retail inventories. They were up 0.1%. And the big news of retail inventories is they finished last year at minus 0.5%. That was the first major turnover to the downside since May of 21. And it hasn't been all that responsive. Where we are getting the big moves is in wholesale inventories. Now, it's up 0.3, but our last look in January was up 0.8. That was the biggest wholesale jump since the summer of 22. And that's what many, of course, are going to focus on. Is this getting ahead of the tariffs? Is this going to be a hiccup if the tariffs prove to be somehow not as bad as we anticipate? Last I looked, Gain, I had 2023 data. Imports on goods and services as a percentage of GDP is probably in the 13 to 14.5% range, just to kind of put a face on it. Interest rates are moving down on this data, but moving down on this data still puts a 10-year at 4.37, which isn't all that much lower if you consider where we were a couple of weeks ago. Back to Joe and Becky.
So fantastic news. Let's get over to it. So we have right through here, continued jobless claims came in better than expected, and the GDP came in better than expected. Now, tomorrow we have the PCE number, the true inflation number that the Federal Reserve monitors. I'm going to go out on a limb right here. I'm going to say this is going to come in better than expected because we had last week's CPI and the PPI number come in 0.2 lower. So, and oil was down quite a bit. So I'm expecting the PCE, the inflation number that the Federal Reserve monitors, to go down a little bit tomorrow. So far, good news. And the markets don't, even mainstream media doesn't like this. They need the shock and all so you to watch their videos and the blow-ups and things like that. But maybe we're just on a path of normalcy at this point. We have a steady market. You have the media pumping all this stuff, and just look at it. We have worldwide events like Russia and Ukraine, wars there. Then we have wars in the Middle East. We have tariffs here. We have uncertainty in our governments. We have all this other stuff. But the market's not doing so bad. If you laid all this out and said, okay, what do you think would happen with the economy? It's dismal. But so far, so good. So maybe the markets are just going to stabilize with all this, and we don't have to crash. Nor do we have to really rally. Maybe it could just be slow and steady. That's my hopes, and I hope that's what your hopes are as well. So let's get over to recap the day. So that's basically the news that we have so far this morning. So GDP, inflation, all that numbers, everything came in better than expected. So mortgage rates are stable right now. Let's get over to what the bond market's doing. It is doing what so far minus 2 ticks. So it's basically flat today. So let's go to the Dow Jones. It's still across the board. The Dow Jones is bringing back some. It was a little bit lower than this, but across the board, let's just say it's stagnant. The NASDAQ's up 21, Dow Jones is up 31, nothing really to write home about, but the VIX is rising a little bit, and that's the anxiety levels on Wall Street. Then you can stay up here, Dow falls 200 points after Trump slaps 25% tariffs on auto. And most of the auto companies' shares are starting to drop right now. So that's a report that we have so far today. Now, if you're looking for a mortgage or looking for a car loan, don't turn the dial yet, please. This is going to save you a lot of headaches. Okay, what this is when you put in your application for a mortgage or a car loan, any bank, what happens is the credit agencies at that point have the ability to sell your financial data. If you want to stop that, go to optoutprescreener.com. It's a service provided by the bureaus to let you guys opt out of them selling your financial data to other financial institutions. And it really works, folks. So what am I and who do I do? Or who am I and what do I do? So our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, I'm actually a loan officer, and that's what I do for a living. I don't do videos for a living. I'm actually a loan officer, and I'm trying to provide you guys with educational information to help you, navigate the real estate market. If you're interested in working with me, I'm licensed in all 50 states as well as Puerto Rico. Here's the unique thing is our bank is set up with, we do loans at the bank, and then we have 33 other lenders that we work with. So imagine you trying to do this. You would have to call bank after bank after bank, put in your application, ask them to do a soft pull, see if they can send you a loan estimate and all this other. Wonder if you could just work with one place and get multiple quotes. You work with me directly, and I'll be your loan officer, but I can assist you with getting a loan with our bank. Or even if we're going with the other companies, other banks, I'll be your loan officer. How's that? So if you want to get involved or just figure out how this works, give me a call or reach out to me and schedule a consultation. You can go to therateupdate.com. Here's my website. You go up there and right at the top, there's apply now. You can put in your application, or you can schedule a one-on-one consultation with me right up through there. Just schedule that. Or if you want to jump to the front of the line, just scroll down to the bottom and you're going to find our 800 number as well as my email address. So give us a call at 844-775-5626, or you can reach me personally at dan@therateupdate.com. And yes, folks, it'll be me answering you. So please give me your questions, concerns. If you're looking to buy a house, refinance, let me know your scenario. Give me your contact information. Love to call you back to answer that question and maybe other questions that you have. So thanks for watching, folks. I greatly appreciate it. Have a great day. God bless. And I hope to see you here at the closing bell to see how this mess ends for the day. Thanks for watching, folks. Take care. See you next time. Bye-bye.